Welcome to the Deep Dive. We're here to help you get informed without getting overwhelmed. And today, we're tackling a big one in the crypto space, XRP. I mean, it's had this just incredible run, right? Up something like 770% over the last 3 years. Seems almost unstoppable to a lot of folks.
It really does seem that way on the surface. That number is, well, seriously impressive.
But here's the thing, the paradox, really, even with those massive gains, XRP is still, quite a ways off its all-time high. What was it, $3.84 back in early 2018?
Yeah, exactly. January 2018. So yeah, a significant gap remains.
So that's our core question today. Why hasn't it climbed back? And, maybe more importantly, could we actually see it dip lower before it ever gets near those old highs again?
It's a critical question.
Yeah. So our mission here is to dig into the latest analysis. We're looking at market stuff, economic signs, crypto-specific news, trying to understand the forces pushing XRP up and the ones holding it back. We want to help you sort through the noise, really get a handle on the volatility, and figure out what the future might actually hold for it.
And it's such a complex picture, isn't it? That 770% jump is, well, it's undeniable. But you have to contrast that with it being so far below that peak from, 7 years ago now.
Right.
The story isn't just about the wins. It's this constant tension, this push and pull between its strong fundamentals and some pretty serious challenges it's facing. We really need to look at both sides.
Absolutely. Okay, let's unpack this, Dan, because XRP's journey, it really is a fascinating case study in how crypto markets work, or sometimes don't seem to work logically.
Right.
We've hinted at challenges, but let's start with the positive side. There is a strong case for XRP's potential upside, right? What makes the optimists feel good about it? What could fuel more growth?
Well, a really big factor when everyone's watching is the whole regulatory scene, specifically the potential approval of spot XRP ETFs, exchange-traded funds by the SEC.
Or the ETFs, right.
Yeah, if those get the green light, it would seriously simplify how investors, maybe like you listening, can get exposure to XRP. It just makes it much easier for traditional money, both institutional and retail, to come in. Could be a whole new wave.
Opens the doors wider, basically.
Exactly. But it's not just speculation about future products. XRP actually has significant real-world utility right now. Its main job is being a bridge currency for cross-border payments.
Okay, explain that a bit more. How does that work in practice?
Think about sending money internationally today. It often involves several banks. You need accounts pre-funded in different currencies. It can be slow. It can be expensive. XRP aims to cut through all that.
So it speeds things up, makes it cheaper.
Precisely. It acts as an intermediary. Financial institutions don't need to tie up capital pre-funding all these different currency accounts, these so-called Nostro Vostro accounts. XRP can be used for that transfer in real time at a low cost.
So it's like a temporary holding spot for value during the transfer.
Sort of, yeah. It facilitates the exchange quickly and efficiently, and we're already seeing big names using it. Ripple's On-Demand Liquidity Network, or ODL, uses XRP for exactly this.
ODL, right.
And you've got institutions like PNC Bank here in the U.S., Santander over in Europe. They're using this system. As more banks and payment providers adopt ODL, the demand for XRP itself could really grow. That provides, genuine long-term support for its price.
That makes sense.
And that's where XRP's utility gives it a foundation that, frankly, a lot of other cryptocurrencies just don't have. It's solving a real problem.
Okay, so that real-world application, solving a genuine business issue, plus the potential regulatory wins like ETFs, that definitely builds a strong case. It's not just hype.
It's not just hype. No, there's substance there.
But, and there's always a but in crypto, isn't there?
Usually. Yes.
Our sources also point to some pretty major headwinds, things that could push XRP down, maybe even before it gets close to that old high again. Where does it get really interesting on the challenge side? What's the first hurdle?
Well, the first one is maybe the most human one. Simple profit-taking. Speculative profit-taking. Think about it, an asset jumps 770% in a few years.
Yeah, you'd be tempted to cash out some chips.
Absolutely. It's completely natural for investors, especially those who got in early or bought a dip, to want to lock in those gains, that urge to sell when you see a huge profit on paper. It's powerful.
And XRP has a history of this kind of volatility, right?
Oh, definitely. History gives us a really stark example here. After hitting that $3.84 high in January 2018, by December of that same year, it had crashed, plunged by about 86%.
86%, wow.
Yeah, and that was despite having those real-world uses we just talked about. It just hammers home how volatile XRP is and how much speculative feeling drives the price. A lot of people likely bought in just because it was going up fast, momentum chasing.
FOMO effect.
Exactly. Fear of missing out. So if there aren't compelling new reasons to keep holding, these momentum investors, these speculative holders, they're often the first to sell. And that selling creates downward pressure. If we connect this to the bigger picture, this is a common pattern in highly speculative assets.
It really shows you the power of just market psychology, doesn't it? That herd behavior. Jump in when it's hot, take profits when it looks good, or maybe when you get nervous.
That's a huge part of it. The rapid climb often sets the stage for a rapid fall as early money cashes out and not enough new money comes in to pick up the slack.
Okay, so profit-taking pressure is real. But what about good news? Logically, big positive news should push the price up, shouldn't it? Yet, you mentioned earlier, even with something huge like the SEC case resolution, XRP went down. How does that even work? It feels totally backward.
It does feel backward, and it raises a really important question about how markets actually process information, especially in crypto. This leads us to the second challenge, the priced-in phenomenon. Yeah. Take that SEC litigation against Ripple Labs. The resolution in 2020 was a massive deal for XRP. Huge legal uncertainty lifted. You'd expect a rally, right?
Definitely. Champagne corks popping kind of news.
You'd think. But in the weeks after the announcement, XRP's price actually fell, dropped about 10%.
Fell 10% down after winning. That's wild.
It is wild, and that quiet, even negative reaction tells us something important. It suggests the market had already sort of anticipated that positive outcome. Much of the potential good news was already factored into the price before the official announcement hit.
The old buy the rumors, sell the news adage.
Exactly that. It happens all the time, not just in crypto. So even when things look fundamentally better or the regulatory picture clears up, the price impact can be limited if everyone was already expecting it.
So applying that logic, even if we get those spot XRP ETFs approved, which seems like massive news, or if ODL adoption really takes off, we might not see that immediate huge price surge because the market's kind of expecting it already.
That's the risk, yes, it's the implication. For XRP, it means future good news might not automatically lead to those big immediate price jumps we might otherwise expect. To get sustained momentum, we might need something else, something truly unexpected, some new catalyst to really get investors excited again beyond what's already jaked in.
That's a really key point for anyone watching XRP. You can't just assume good news equals higher price.
You really can't. It forces you to think about what the market doesn't already know.
Okay, so we have profit taking, we have news being possibly priced in. But our sources highlighted another risk, maybe the biggest one in the short term, the wider U.S. economy. How does the general economy play into XRP's fate?
This is probably the most significant near-term threat, I'd say. You know, the stock and crypto markets have been pretty, let's say, frothy for a while, often boosted by economic optimism. But that seems to be shifting.
How so? What are the signs?
Well, look at recent job data, for instance. It's painting a bit of a worrying picture. In August 2025, the U.S. economy added only about 22,000 jobs. That was way below what people expected.
Oof, okay.
And July 2025 actually saw a loss of 13,000 jobs. Maybe even more telling, the government revised the numbers for the first 3 months of the year and found 911,000 fewer jobs were added than they first reported.
Wow, nearly 1 million jobs just disappeared from the earlier count. That sounds serious. But why does job data hit crypto specifically?
Well, when investors see numbers like that, weak job growth, downward revisions, it signals a potential economic slowdown, maybe even a recession down the line, and that hits investor confidence hard.
Because people get nervous and pull money out of risky things.
Exactly. A weaker job market usually means less consumer spending, lower company profits, less money flowing around generally. People become risk-averse. Their instinct is to move away from volatile investments. And let's be honest, cryptocurrencies are definitely seen as volatile and towards safer assets. It's that classic flight to safety.
Makes sense. Less appetite for risk when the overall picture looks shaky.
Precisely. And we've seen how quickly economic worries can hit XRP specifically. Remember the inflation surge back in 2022?
Vaguely, yeah.
Well, during that period, XRP stayed stubbornly below $1 for a lot of the year. Investors were just looking for less risky places to put their money. Another clear example, April 2025, President Trump announced new tariffs. What happened to XRP?
It dropped.
Dropped about 15% in just 1 week. Purely on fears about what those tariffs might mean for the broader economy.
So even with its unique tech and uses, XRP just can't escape the pull of the wider market sentiment, can it? Those examples really show how volatile it is, how fast bad economic news can knock it down.
It really underscores the point. While XRP might recover eventually, like it did in those cases, it highlights the systemic risk. Even cryptos with strong fundamentals are vulnerable when the big economic waves start crashing. If we connect this to the bigger picture, it underscores the systemic risks even fundamentally strong cryptocurrencies face.
So the key takeaway for you listening.
Yeah, if you're thinking about buying XRP, it's really smart to keep a close eye on the overall economy. Be ready for potential dips, maybe significant ones. In the short term, especially if the economic news stays negative, don't just look at XRP in isolation.
What a fascinating deep dive. Really shows the layers involved here. So just to wrap up what we've covered in this kind of intense journey, XRP has this real split personality. On one side, you've got solid fundamental uses that bridge currency role, the potential for easier investment through ETFs, real institutions using it, strong arguments for its value.
Definitely.
Real substance.
But then on the other side, you've got these powerful headwinds, investors wanting to take profits after that huge run-up. Good news, maybe not having the impact you'd expect because it's already priced in. And maybe the biggest immediate issue, its sensitivity to the overall economy, especially in the U.S.
That push and pull is constant. Yeah, and understanding both sides, these opposing forces, it isn't just interesting. It's really crucial if you're trying to make smart decisions in a market this wild and fast-moving. It's about seeing the tailwinds and the cross-currents.
Absolutely critical.
So as we finish up, we want to leave you with something to think about, a question that sort of builds on all this. Given that XRP does have this established real-world utility, solving a genuine problem, will that fundamental value eventually be strong enough to let it break free, to sort of decouple from the general market mood and really carve out its own path?
Or will it stay tied to the ups and downs of global economic confidence, forever linked to whether investors generally are feeling risky or safe?
That's the big question, isn't it? Keep that in mind as you watch things unfold. Thanks for joining us for this deep dive.